We are live and it is the new year. Happy New Year, everybody. 2026 is upon us. Thank you for joining us again. And thank you for being such loyal followers. We actually really do have quite the following at the moment. I'm surprised and excited and happy that we have people that actually genuinely think that we are intelligent enough to listen to, which is kind of fun.
Worthwhile.
So thank you and Happy New Year to everyone. And, we thought that to kick off the new year, and the new kind of real estate market that we're kind of heading into this year, it would be wonderful to have one of my dear friends, if not one of my best friends, let's call it that, on the show to be able to talk a little bit about mortgages and what's happening and what the future holds for mortgages this year, because there is a heck of a lot going on already, and it's a hot topic right now for us in the real estate world. So, Jivan Sangera, owner of Circle Mortgage, down there on Brant Street, South Burlington, has his office there. If you ever want to pop in and have a coffee, I'm sure he would accommodate you. But welcome to the show, Jivan. I appreciate your time, sir.
Thank you, Justin, and hi, Karen, and Happy New Year to all of your listeners and watchers. I also appreciate the fact that they think we're somewhat intelligent.
I know, right?
Somewhat. We don't have to be everything for everyone, but we should at least know what we're doing. And and I appreciate the acknowledgement of our friendship, bro. It's we're bros for real. So it's happy to support KP and the team and everybody right behind you. But it is a very interesting market, right? Something that I feel like hinted in that, and Karen, you would remember 2008, 2009 when the credit crisis started in the States, and how we had like this 6-week, almost like 10-15% degradation in prices that literally lasted from like the middle of April to the 1st of June. Yeah. And then the market came roaring back. The feeling I have is the feeling I had during those 6 weeks of what's next, because I'll be honest, I don't see that same rocket ascension for values anytime soon. A lot of people were very much hoping that the reduction in interest rates would lead to a bigger flurry of activity. It has not. Thankfully, we have a book of business over here where we're able to service our book. But if we were relying on sales, like new home sales or existing home sales to be the what is traditionally our number one source of volume, we'd be really hungry right now. So we're very thankful that our customers continue to trust the value that we offer in our opinion. And quite honestly, Karen is one of the most experienced realtors in Burlington and has been for a long time. And I consider it, it's not a medal on my chest or anything, but the fact that a lot of your tougher questions are turned to me means something to me. So thank you for that. And I hope to continue to be a resource for you and your people.
Well, let's say like the kids do and say, let's continue the glazing a little bit and say, honest to God, like, I trust our family money with Jivan. And so when the time comes, it's always going to Jivan. And so, if you want advice that similar to how he would give his friends and his family, and you're coming to me for advice for stuff and I'm bringing you to Jivan, that's the kind of advice you're getting. So that's the sales pitch. Okay, now let's prove that we know what we're talking about.
And it's not even a sales pitch. Sorry, go ahead, Karen.
I want to it's hard to talk over to.
Sorry, we both like to talk.
Anyway,
it might be a bit of an
I wanted to add to Jivan's comment about the market and the start of the year. Yes, I'm surprised there's a lot of activity that's going on under the $1 million range in regard to showings, and that's exciting. Yes. And I agree with Jivan, and I think what this year is going to be is like getting into bed and getting comfortable, sort of settling in and saying, okay, now we're comfortable. Let's warm up to the market and let's get ourselves adjusted into these rates and see if we can afford this, honey. That sort of thing. I don't see the luxury market excelling tremendously. It's always been good. I do the luxury market, so I've always had a very good market in the luxury market. And because the wealthier people tend to have that
And make
finance.
money in every market.
Mm.
Yeah.
They're outside of the traditional version of what the
Yeah.
market is as
Yeah,
well.
yeah.
So,
So I'm talking about the average buyer and seller. And I
mhm.
think it's a time where they're all going to adjust this year and they're going to look at it and say, you know, honey, I don't think things are going to change dramatically as far as the rates are concerned. So let's work our budget and
Mm.
let's see where we're going to go with this. And if I'm wrong on this, Jeevan, you let me know. But I think that that's where it's coming to. It's going to level out and people are going to get comfortable.
Um, I don't disagree with you. I think that the prices still have a little bit more to give.
Mm.
I don't believe
Mm,
we've hit the absolute floor on that. And as the big question will be is what the foreclosure market does. How many
Mm.
of those homes actually hit the MLS system? The
Mm.
one thing I see is that they don't do a lot of advertising around the fact that it's power of sale, obviously, to make sure that they're securing as much of a return as possible for the person suffering the loss. And that's the one thing I think a lot of times we forget when people get all excited about power of sales and foreclosures coming down the market. These aren't
Come on, man.
corporations losing their shirt, it's people.
Yeah.
yeah,
um,
yeah,
so we do everything we can to keep people in their homes as long as it makes sense to keep them in their homes, right? Sometimes, and more than ever, we have to have more difficult conversations with customers so they understand that their true situation is that they might be better folding,
Mm.
um, and netting out what they can before they get into aggressive, you
yeah.
know debtor in possession charges and court charges and legal fees and that sort of stuff. And I was speaking to a local lawyer today, who is very well known, and next time I'll get his permission and I'll name drop him too. But him and I were having a chat, and what we were talking about is that how important it is for people to act before something happens, not
Mm.
after.
Mhm.
So
Yeah, absolutely.
he had a handful of customers that were proactive about it, and he was able to work with the other side and get estoppels in place, uh
Mm,
estoppel certificates to prevent the sale process, just for people that might not know what that means, right? So a court ordered stop to the sales process so that it gives people time to sell their home. A lot of, just like tenants, unfortunately, that kind of go into hiding when they don't have the rent. Some people are falling victim to that instinct, right? Like it's just self-preservation, right? Like that somebody doesn't want to see their home taken away or anything silly like that. But when reality's staring you in the face,
Mm.
you need to do something about it. And a lot of times, we have people that are proactive and reach out, and we're able to get them some higher rate financing to get everything even fixed up so they can control the sale process, right? So they're not evicted from their home and watching a sheriff's notice go up on their place. They can, with, and I hate to say with dignity, because there's no loss of dignity in suffering a financial loss. It's a fact of life. But
Mm.
but them being able to control the process, it also makes it a lot more likely that they'll be able to get a mortgage in the future,
hmm.
right?
Yeah,
That's the
because
one thing a
yeah.
lot of people aren't thinking about is that if your lender ends up suffering a loss on your power of sale and they're suing you for it, guess what? Good luck ever getting an A mortgage again. Um,
Mm.
I hate
Ever,
to say they
ever?
talk, but somehow they all know when somebody's had something go power of sale on them and have, given up a property. And then you go back to a lender 5, 6, 10 years later, thinking, oh, everything's fine now. And guess what? We're answering questions about that time you had to give up your property. Now,
Yeah, well,
Circle Mortgage
technology does. I
customers,
think technology
one
is going
sec.
to do that.
Circle Mortgage customers, 20 years deep, no power of sales around here. Uh,
Nice.
Yeah.
no
That's
power of
pretty
sales.
amazing, actually. I love that.
Legit, no power of sales. And the reason I'm so proud of that
Dude, that
state,
is a friggin' flex. Sorry,
yeah,
that's amazing.
absolutely,
Oh, that's
absolutely,
awesome.
especially in the private lending market, bro. In our private lending, we have not had one power of sale in 20 years of doing this.
Mm.
And the reason is it's a lot easier to say no to a borrower than sorry to an investor.
Yeah.
Mm.
And those are just facts. And there's plenty of mortgage companies out there that are more concerned with risk and yield, and the yield associated with that risk. And as long as somebody's willing to sign it, they're willing to sell it. And yeah, sorry, I won't
But you
carry
know
the
what? That
burden of
also
that.
speak. Can I just point out that that's
Yeah.
also speaks to the qualification process and the willingness for yourself to put people in products that are meant for them, and not products that are going to overextend them over time
Yeah.
and cause them problems down the road if there is any kind of financial blip or squeezing
Yeah.
out the last dollar to make it work. Hey, we want this house really bad. Oh, that's going to be a little too much for you. And then this type of market happens and boom, they're in rough,
But
right?
just
You are giving people valid, real advice that allows them to make the right decisions, right? I didn't mean for this to become a huge circle mortgage sales pitch, but
No, no,
genuinely
I'm not
speaking,
even trying to. I'm not trying
no,
to.
but the
but you
unfortunate
see the
part is
problem,
that's
but
where it goes.
let me say that the problem we have out there, okay, and this is honestly what I see, and over my career, I see lending money and greed. Okay, it
Mhm.
goes hand in hand. And so when a private lender is approached within a lawyer's office and the lawyer says, "Oh, you can lend money to this guy for 500,000 and charge him 10% because he needs, or 14% and principal and interest only." And so this poor guy who's desperate, this homeowner who's desperate goes, "Okay, this is great because the bank won't look at me."
I disagree.
That's
I disagree.
you
I
disagree, eh?
respectfully disagree, my friend. I respectfully disagree. When somebody's carrying 22% credit card debt and we can trim that to 14.99%, that's 7% of real money that stays in their pocket. When
Yeah,
somebody is carrying credit card debt or consumer debt that at the minimum payment is going to take them 35 years up to 100 years to repay, a private lender is 100 times better option because at least your credit score is improving.
yeah,
B, you're actually, and again, to certain people, an interest rate of 10% or 15% is asinine. And it makes sense for those people. And it would totally make sense that a lot of those customers are yours, Karen.
absolutely. I
So
agree
you,
because
in your market,
22% on a
right?
credit card is ridiculous.
Mm.
So, and that's low. That's low, right? If you got a good travel card, you're 29.99%, and you're getting a $7,000, $8,000 bill from Christmas that you're just looking at. Like, let's be real. Like, you're just looking at it. You're not able to just stroke a check for that. And again, there's some customers that can, and to them, more power to them. I'm a real person with a real family, and I have some investments and I do all right. But to think that it makes more sense for, like, I'm just saying that the perception of private financing a lot of times is very predatory on the lender side,
Yeah.
and they're not bad people, right? Like,
Yeah, but I
there's a
think it's
lot of
also
times
who you go
where,
to for it too, right? If you have the advice of a good mortgage broker or a broker that understands this and has good
yeah,
people around him, that's one thing, right? There are predatory practices out there in this
yeah,
case. And Karen, I know, is speaking specifically to a certain circumstance that we had come up recently where a gentleman had a massive hospital bill that he had to have covered, and he
yeah.
went to a private lender to do so, and he's paid three-quarters of that bill in interest only. And so, unfortunately, it looks horrible on paper, but he also, didn't really advocate for himself in a lot of ways to help make that better over time, right? So, and
Look,
he's left it to the
respectfully,
last minute where it's become a thing, right? So it's a different circumstance, but ultimately, you can find people that there are solutions that make sense for everybody, I would say.
yeah,
Yeah,
and
and one of the best, I think the best solutions is if you get behind in your mortgage payment, approach your lender as a
Mm,
owner and say,
ASAP.
"Hey,
yeah.
yeah," but also I heard that some of the banks and some of the lenders are going at 50-year amortization
Mm,
to lower those payments. And
mm,
so that's what I'm suggesting to a lot of, to
mhm.
some of my people. I'm not saying a lot because there's a few people that have approached me. And I said, just talk to your lender and
Mm.
And
see how
that's the
it goes
advice we
for
would
them.
give them initially as well, right? Is that, have you spoken to your bank? And you got to understand that workouts are a lot cheaper than power of sales for the bank as well,
Yeah.
right? And then there's also, if it was a CMHC or a Genworth or sorry, a Sagan or a Canada Guarantee insured mortgage, then the lender has a different route
Yeah.
for recovery of their own funds, and even in that situation they're a lot more likely to work with you. I think that the one point we all are genuinely making is don't be reactive, be proactive, right?
Mhm.
Yeah.
And as long as you're proactive, just like if you're behind on your rent and you're proactive with your landlord versus being reactive, you get a very different response more often than not. You might be dealing with a megacorp that doesn't really care if life happens to you, but if you're a normal person and you're dealing with a normal small landlord and you face an issue, as a small landlord myself, I'll tell you that I would much rather work it out with my tenant than go through tribunal and wait and try and draw blood from a stone. So I think we all are in agreement that like just be proactive on it. And if a second mortgage is the way to keep your home and give you the control you need, then great. And if a second mortgage gives you the money you need to have a medical procedure to save your life, then great. And I don't know that person's situation at all, so don't let me comment on that. But at the end of the day, if you need the money and you can get the money and that money is of good use, then great.
Yeah.
We don't get into thirds. There's lenders out there that'll do thirds at 19.99% or 21.99%, which again, still cheaper than the credit card. But at the end of the day, like we won't put that third position lender is in a very precarious situation because they're cascaded down and in any loss position, it's always them that's holding the bag. Because obviously things are cascaded in repayment during power of sale.
Yeah. Yeah.
So now, don't get me wrong. A lot of these predatory lenders are ecstatic when it goes into legal proceedings
Default.
because the interest rate changes, the admin fees start to pile up. I've seen 30K on a 150K mortgage requiring like 180K discharge just because of the power of sale charges, right? So legal fees, the lender charges $500 for every time they tried to contact you. So anyways, I don't want to scare people off. Again, like Justin was saying, like everything has its rate risk scenario on what makes sense. The one thing we won't do is we'll never give you something that we know is going to set you up for failure, because we're not just failing you, we're failing our small investor as well. And a lot of times it's very hard-earned money for those folks. So, in closing on the whole power of sale thing, Justin and I talked to you about it in the fall. I was looking at a property and it had a $1.6 million mortgage registered on it, and I was buying it for $813,000.
Yeah, and the same thing happened on a house in South Burlington. It came on the market for 695 or 687, sorry, and it had multiple offers on it and sold for I think 780, and so, but the mortgage on it was way higher than that.
Yeah, and those are, again, some situations it's institutional, and those institutions have the buffer for that loss. Loan loss provisions is something we hear in the news every once in a while. So a lot of times for those major banks, it never really hits the balance sheet because it gets pulled out of there.
Yeah.
But for a regular family, that I like sleeping at night. So
Yeah. Well, the summary of all that is don't bury your head in the sand if you know problems are on the horizon or already started.
Yep.
Try to go to, like, Jivan doesn't bite. If he's your guy, go to him and figure it out, right? Like, at the end of the day, like, for the most part, these people are there to help you. Banks don't generally want to go into power of sale because it costs them more money. You end up in power of sale, you have nothing to gain. If you at least try to sell it beforehand, for example, you could maybe make a profit of some kind potentially, right? That's basically how it kind of looks.
Or just walk away breaking even,
Yeah, or at the very least, walk away breaking even, and you don't damage your credit any further.
There's people being pushed into foreclosure at 35% loan to value.
That's crazy. That's
right?
crazy.
Like, why would you?
Just
why,
sell that.
Yeah, like why would you even?
Yeah.
Again, I understand that in situations where people's backs are against a wall, they do weird things, counterintuitive things, which is again a survival instinct, and I have all the respect in the world for that. But realistically, burying your head in the sand is the dumbest thing you could do, and you don't deserve what you have coming to you. But like, you should really be proactive about it.
So maybe let me throw this out there. If anybody's in a position right now where they're watching this, like, I feel like this is me right now.
Yeah.
A phone call to Jivan, a text to Jivan, even if it's just a quick conversation to say, yeah, dude, go do this. And it never amounts to anything, but Jivan gives you the right advice. I think that could help. Any one of us, quite frankly, would want to help.
Even like, the other thing we're going to talk about, mortgage renewals.
Yeah.
Do you know how many people I tell that, hey, you've got a really good deal in front of you, just sign it?
Yeah.
Like just sign it, right? Like, this 5 basis points that you think is going to be such a large delta in your life is negligible.
Yeah.
You're
Yeah.
going to be annoyed by this process. Just sign it. Now, don't get me wrong. There's also people being offered prime minus 20 when we can go get them prime minus 80. So those people should not sign it.
Yeah.
Uh,
Yeah.
but
I
at the same time, if you're getting offered something better than prime minus 60 by your lender today, at renewal,
prime
like you're
minus
you're not
6.
saving much by leaving.
Okay.
Yeah. Yeah.
I just want to also mention that it's not only the small guys,
Mm.
the small price points that are running into financial issues. There's a lot of big guys. For instance, a $21 million house in Bridle Path, on the Bridle Path, came up for power of sale. And I don't know if you saw it, Jeevan, but
I did not know.
it's a
Justin
it's a
doesn't send me those
huge
listings.
it's a huge lawyer in Toronto.
Wow.
And he went into a bank-owned property, and he's, I mean, you know what? It wasn't 800,000, it wasn't 1,500,000, it was 21 million. So I'm going to tell
Yep.
you that it's across the board. It's not just the small guys or the small
Well,
price.
and Mr. 21 million is also paying $100,000 a month in a mortgage payment, right?
No.
Well, I guess he's not. That's why he's that's
So let's shift over to one of the things we wanted to just talk about, which kind of works in this framework based on what we've just been talking about, is appraisals and renewals. A couple things. When it comes to appraisals, one of the things that I've heard a few times now from other people and just in the general in the marketplace is, we're back to about 2019 pricing as a whole. And I think when that happens in the marketplace generally, when you're renewing a mortgage or you're getting an appraisal done to get a new mortgage or whatever you're doing, you have to be mindful of the fact that appraisals tend to be more conservative than like when we come in, right? For example, and do an evaluation on a property, because they don't take into the account some of the subjective value of a property and certain things, but they are there to protect the banks and make sure the bank's getting a good deal within their mortgage framework. So
I disagree
what are
with
you?
you, but I'll explain in a second.
Yeah. So what are you seeing as far as the appraisal value of properties out there when they're coming back to you based on some of your input and your information that you have right now?
I think the comment that you made about why an appraisal takes place and how values are determined and who those values are to the benefit of is something that is reflective of our marketplace today and what the consumer's vibe is on appraisals,
Mm-hmm.
right? And I totally get it because I'm sitting here trying to do you hear that?
Yeah, I did.
Okay, yeah, no, that's like
You're
who's
not going crazy.
like who's running the weed whacker in January?
That was
But
good.
anyways, what I was saying about ADD appraisals, right? So appraisals are meant to give us a true market value, right? So what would this property reasonably sell for in a reasonable window? And the fact that you yourself are acknowledging that the price that the realtor gives you and the price that the appraiser gives you is likely different for the perceived reason of it being to the benefit of the lender actually totally speaks to what the market vibe is, right? And quite honestly, it basically speaks to the reality of the situation as well. But the challenge is that, so we've had situations where we had a property appraised in April in Stony Creek, Ontario for $1.26 million. We had that same property appraised in November. Guess.
A million?
Million 80.
Yes.
Million 80.
I
Right?
mean, bad, but yes.
Yeah, right. So yeah, good job on that value, Justin. You do know the market,
What
but
do I win?
right, it's a Leaf game sometime soon. But jokes aside, like that. But what ended up happening? So let's talk about real terms. Well, guess what? That person in April that was like, no, I'm fine with this amount, needed more. And when we went back to the well,
Yeah.
there was a total of like $4,000 in available equity.
Mm.
So obviously not proceeding with that transaction. But here's a property that again, in April was considered to be $1.2 million, is considered 0.08 today, sorry, 1,080,000, right?
Yeah. Yeah.
Yeah, I guess that would be 1.08. So, at 1.08 million, and now we aren't able to get them what they were looking for. So,
Mm.
for people that have transacted, like you were saying about prices receding to 2019 values, we're estimating closer to 2022 values, that everything that the rip that's occurred from 22 onwards is officially gone. But we do still see some upside compared to those 18-19 purchases, including 20 before the crazy run up. The one thing that I found curious is that prices were higher while the rates were higher, right?
Right.
So
Mhm.
when rates were at 5.75%, that $1.2 million property was still at 1.4.
Hmm.
Mm.
And logically speaking, it should be more affordable for people now, and they should be more likely to act, but values are still falling.
Mhm.
Right. So that tells you that consumer confidence is now behaving on something other than just the interest rate.
Yeah.
Right. And Canadians' consumer confidence is just running at a lower level than anything that I think, Karen, I'm sure you've seen it before, but respectfully, anything in Justin and I's professional careers, and we've both been doing this since our 20s. We haven't seen this before.
Well,
Right. Like,
91 to 97 was when the extreme amount of power of sales or bank-owned properties came forward. And I was instrumental, thank you very much, for representing about 5 big banks, okay, and some private lenders. And so I just did them one after the other. But there's a buyer for every property, and that consumer confidence comes out with those qualified buyers who have been, waiting for this moment to happen. And they may be renting, they may have another house, but the issue is that they will continue to search that market
Mhm.
while it's decreasing, So
Mhm.
so on that house on Woodhaven that sold for 100,000 more when it was under a bank-owned property, then obviously, after having 10 offers on it, there's 10 people waiting for something like that.
Mhm.
So that consumer confidence is great,
Mhm.
in regard to that. But that's what happened from 91 to 97. They sat and waited, and now they're going to you know, position themselves financially and qualify for that one house that's going to come on the market that they can buy.
the sub-$1 million market is the one that's going to stand to benefit most, right? Because we were talking about the slowdown in activity being because we didn't have a rate that started with a 3.
Mhm.
Well, now we've got rates that start with 3, and we still don't have that flurry of, or that extreme
No,
uptick in buyer
no.
Well,
activity.
there's also other outlying factors like grocery prices, and
So
people are
inflation
spending
is
more money
definitely
on
a thing.
those things.
But I think the bigger challenge is that the vast majority of the market, just based on the fact of the renewal glut that's happening this year,
Yes.
that the vast majority of the market refused to miss the train on the ride up. And you
Mm.
can't blame them, because cheap money we were being told by the Bank of Canada and the Prime Minister that cheap money was here to stay.
Mm.
And we started talking about new normals. Shoot, I started talking about new normals, being a 3.5% interest rate, not the 6% that's the historical average. And the amount of people that, even when prime flew through the roof, and we were talking about a 7.25% prime, I think that's how it got, but I know it started with a 7. And the point is that at that time there's people panic locking into fixed terms, and it's like, no, dude, like don't. Now, those people have double the issue, because A, they're stuck at a higher interest rate. B, they've got an interest rate differential penalty
Yeah.
staring them in the face. And so they're just as stuck. But I think a lot of the reason we haven't seen this uptick in activity is that in that 5-year window of 2019, well, realistically 2017, 2018 to 2023, um, all we kept talking about was don't miss the train.
Mm.
Yeah.
Shoot, I said it on CBC. Uh, and that's not even a humble flex. Like, I'm telling you honestly, like, professionally speaking, that's what we were being told. And then there was the old school dudes and again, I don't have their permission to mention their names, but like there were the guys that had seen it before and the ladies that had seen it before that were literally going like, oh, we've seen this before. And younger investors and lenders are looking at them being like, okay, boomer, this is here to stay. And now it's like, shit, dad was right again. Mom was right again. The realtor was right again. The guy that's been doing mortgages for 50 years was right again. And it sucks because we were all being told that they were wrong. And it was literally
Yeah.
the news cycle said they were wrong. All the supporting statistics said they were wrong. The printing of billions of dollars was not meant to affect our overall interest rate. And, the basics of economics told us that was wrong.
This just goes to show you, though, that that nobody really does have a crystal ball, right? So I remember a news article in January of something in the middle of COVID where Korea and all of their statisticians and economists, that's hilarious, economists that came out and said, this is what's going to happen this year. We are going to lose 60% in property values this year. And it was 2023 or 2022. I can't even remember. And boy, were they wrong. If
Bro,
I
I
go
think we
back and
talked about that and we were like, the sky's not falling. Like
right. And it was like, it's so, I mean, you can look up to people, but you have to also, this is a common thread in life today when it comes to politics and people is like, yes, great. Listen to your leaders and listen to smarter people, but take all of the information and start making your own decisions and what's
Yeah.
best for your
Yeah.
family.
Great
And take
argument.
that macro information and turn it into micro and have conversations with people like Jivan and Karen and Justin in the local market to determine what's best for your family in the moment that you're in. And that's the other point is you could try to plan for the future in a lot of this stuff, and it's good to do that, of course, and there's people that will help you with that. But when you're buying and selling real estate and when you're looking for a new place to live, a family home or whatever it is you're doing, in the moment is when we have to have a discussion. Because, I jokingly tell people all the time now, Trump could tweet something and the market changes directions immediately, right? And so like there's just so many outward factors that really weren't a thing even in the 90s. You didn't have the same, immediate news cycle like we do here now in this world, right? So things didn't happen quite as quickly, and yet they still had big issues. Here, you know, on a daily, hourly basis, we can have some crazy change all of a sudden and things
Yeah.
go a different direction and up
that's
or down. It doesn't matter. I don't care which. I'm not trying to talk doom and gloom. It could be a positive thing. It could be a negative thing. It just is. So I just want to be clear that like the macro is great and understanding the bigger picture, but your home on your street with your address and your family in it is going to have a different conversation than someone two streets over or someone two cities over or the next country
Yeah.
over. Right. So
You're right.
make sure you have these conversations with people like us.
Yeah.
Well, it's a micro transaction, right?
Mhm.
So everybody takes macro info and tries to apply it to their micro transaction. But
Mm.
the thing is that again, what are you chasing? What's your real goal here? And if the only function of what you're doing is the lowest interest rate possible or the lowest sales price possible, like lowest purchase price possible, then there's one strategy. And
Yeah.
if you care more about your long-term solution and your comfort, then it's another strategy,
Mhm.
right?
It's,
So it's
it's
really
fun.
important that people
It's
are looking.
finding a home.
Yeah.
And everybody has lost that when the frenzied market, everybody lost that perception of finding a home that they're emotionally attached to. And they lost that completely was they walked in, oh, let's buy it and let's get it and let's pay 300,000 over asking and blah 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 blah. And now it's a totally different
Mm.
because now we're back to the olden days. Excuse me, I have to say that. We're
Yeah.
back to walking into a house and showing 30 homes and saying, okay, so do you like this home? Oh, I love this home, but I don't like this and I don't like that. So we go to the next home. But in the frenzied market, it wasn't like that at all. But it's finding a home now.
Absolutely. And imagine that looking at something that you're going to spend the majority of your life in more
Yeah,
than once before you buy it, or
yeah,
not at all.
Yeah.
Or not at all. And then you also like, and like you say, the good old days, there's some realtors that need to know that message as well. Artificially pricing things at 999 when you're asking for 1.8 million is also not a strategy. To to successfully transact with people, and
There's
some
an
might
inside joke there. I just should let everybody know.
uh, some might consider it a monstrous waste of their time and intention.
Yeah.
Not even
Oh,
including their money.
and that's true though, Jivan, because the realtors believe and believe that their price is right. So just as an example, when we price something, and we priced something recently, Justin and I, and it was on the market for 1.8 for 4 months, didn't sell, had 5 showings. So we went in at 1.4, 1.5, right? And said, this is what the market value is. And we based it on all our stats and comparables, because we know it. And the other agents walked in and went 1.7.
And they took the 1.7
Mhm.
because, but again, realtors should listen to that, right? So even look, we've all been doing this for a long time, and realtors have been my number one business partners since the day I got into this industry. I understand that there's value to securing a listing, but there is no value to misleading a customer into thinking, or playing on what is really their frayed nerves, because a lot of these people that are selling right now bought at a 1.8% interest rate, and without even finding out what their new payment is, are panic selling or preparing to sell, because they're fearful of what this new interest rate is going to look like for them because it's gone up,
Mm.
not taking into account the fact that they've had some real amortization occur on their existing mortgage, and we can reset their amortization up to 30 years. So, there's lots of ways to manage and control what they're facing, but when people are trying to do it, haphazardly or in a panic format, that's going to happen. But again, I think we all have a professional obligation to be realistic with people, right? So when that 1.7 listing sells for 1.55, do you guys get to send a told you so card to the people? Right? No. Right? Could you
I'd love
imagine
to.
that?
I'd
Could you
love to.
imagine that advertisement listed for 179? I
Maybe
said
I'll design that
151,
on the
sold for
computer one day, and I'll
155.
say, I
Yeah.
told you so.
Well,
Right?
the conversation I did have with this person into her face was, I just want you to know, I'd rather disappoint you now than have you bitching about me in 6 months when your house isn't sold. Right? Because, we feel for the previous realtor who, for all
How
intents and
come she
purposes,
didn't reduce the price then?
yeah, for all intents and purposes, he spent a lot of money on the property marketing and all this. I don't want to slag this seller. I mean, it is what it is. She thinks she's doing what's right by her, and of course, she has every obligation and opportunity to do so, and I respect that. But at the end of the day, like, we as a team, Karen and I were discussing the other day about how to speak to people in this market, right? Because it's not the same conversations we were having 2 years ago or even 6 months ago. This is a time when the tough conversation needs to be had, right? And the best realtors that are willing to have those tough conversations, and the best mortgage agents that are willing to have those tough conversations,
And Jeevan, you
uh,
must have those. You must have
right? To
those.
to to give people the reality of like, hey, listen, sorry, pal, your house ain't worth this. I get it. Here's the deal. And I'd rather have this again, this to me is like the biggest thing is I'd rather sleep at night. I think we've had this discussion before, Jeevan. Like I'd rather sleep at night knowing we've done right by the people we've done right by. Like, and all power to this lady that walked away from us and went to another agent to go try to get more. And maybe she does, who knows? But at the end of the day, we can still sleep at night knowing we did the right thing by her, and whatever happens, happens.
Yeah.
Instead of sleepless nights wondering, oh my God, it hasn't sold. Oh my God, oh my God, oh my God. And it's all about price. It's
Well,
always
and,
And
about
it's
and
price.
it's
all
a
it's all
very
about
short career
and
if all you do is tell people what they want to hear.
but
Yeah.
also, Jivan, you must have those serious conversations with people when they
Nice
come to
stuff.
you and they say, do we qualify for this mortgage? Because we truly believe we do. And then you have that serious conversation, and you must disappoint a lot of people.
Well, thankfully, not my spouse, but you know, I try not to disappoint people. But I am real with people, And you know, the
That's
reality of the situation is simply the reality of the situation. And um, you know, and I don't do unscrupulous mortgages, so
yeah.
you
You
know,
can
since
sleep
fraud,
at night.
yeah, so fraud is not a part of my vocabulary. So because it's not a part of my suite of products, um, you know, we have to be real with people. But like, you know, and I'd like to touch on that for 1 second.
Please.
For all of those realtors and mortgage professionals that were getting people to pay 200K over the face value of the ask and get themselves into a mortgage that they didn't qualify for by committing fraud, that's the renewal wall to worry about.
Mm.
That's the renewal wall to worry about. Don't worry about the people that bought their first house or their second house and were move up buyers and overpaid by 100 grand, but had a decent down payment, or, you know, debt service was well in control. Don't worry about those guys. They're not going anywhere. They are the vast majority of Canadians. But, but for the people that BS to get their mortgage in the first place and are now at renewal and are facing an interest rate that's 2 times higher than the face value of what they paid on the contract, because they paid, you know, tens of thousands of dollars in fees to get people to perform crimes for them. But, um,
True.
you know, sorry to keep it real, but fraud is a
No, it's
crime.
absolutely true. Yeah.
Fraud is a crime. It's a federal crime, and some people talk about it like it's massaging an application, and no, it's fraud. So, you know, as you know, I'm a drug dealer, but I'm not a fraud artist. So, so that being said,
Shout out.
uh, you know, jokes
So,
aside,
so
it's not
speaking
that
of,
we're having disappointing conversations. The people that are most disappointed are the ones that didn't qualify in the first place,
so
and are now facing the reality of that situation.
Jeevan, we need to close off shortly,
Yes,
but what I want to do is what are the rates? What's the reality in the rates today? Like a variable. Let's talk about variables and
Sure.
closed and
Uninsured
funding.
variables, uninsured variables, you're looking at anywhere from prime minus 40 to prime minus 60, prime minus 80 in certain situations. Now that's for uninsurable situations. So those are refinances, properties that were over $1 million when you purchased them. Other options, like, so if your property was less than $1 million and you still owe, you know, it was less than 1 million when you bought it and you don't need any new money, that's called an insurable mortgage. So those rates are down, you know, between prime minus 60 and prime minus 80, depending on the lender. And we have a couple cool programs where if you bought your house for under 1 million, and you need some new money, we've also figured out a way to get you that prime minus 60 sort of rate and get you the new money you need in second position, while giving you the benefit of having a transfer occur on the first. The one thing I want to talk about in that particular situation, the reason you'd want to do that compared to a traditional refinance, isn't just savings on the interest rate, it's also savings on the legal fee. Because at that point, the transfer portion, which is the most expensive portion, is paid for by the incoming lender. All you're paying for is the registration of the line of credit. So where your normal legal fees on a refinance will be anywhere from 2 grand to 2,500, depending on the lawyer and the amount of disbursements, you're talking about it being down around 400 or 500 bucks, and not, you know,
So
3,000.
for the ignorant consumer, what is prime right now?
Prime is 4.45%.
4 point. Yeah, I was just going to say
Okay.
that.
So
So
that's
take that number
4.5
minus
less,
whatever the
less,
number is.
less.
Yeah.
Yeah.
Minus plus, depending on your situation, right?
Yeah.
But again, tied a lot closer to what the market's doing. Um, you know, until 2028, the world is a very uh, it's a very precarious place. You know, what's happening with our neighbors to the south and stuff will definitely affect our market, on bond yields and potentially inflation. And that's one thing I would like to say. If we're putting on our New Year's prediction hats, we're going to hear a lot about increased consumer price index inflation, probably spring, like, you know, late spring into the summer. I'd like consumers to put their glasses on for that right now. Last year, you'll remember that Justin Trudeau, in an effort to keep this country's government, did the was it a GST holiday or an HST holiday,
Mhm. Yeah. Yeah.
where, you know, prices artificially fell
Yeah.
by that amount. Well, guess what? The tax is back. So when you're buying that same thing a year later, it is that much more expensive. So, I just hope that people keep that consciously in their mind when they start to hear these inflation numbers, because that is going to be a thing, depending on what happens with oil and Venezuela and how that affects the market. If you do get reductions in price per barrel, you could see further relief in interest rates. If you do see a lot of upwards pressure on oil prices, that's where we start to look at conversions out of variables, because the oil market is definitely a great indicator of where the bond yields are going to go, and where interest rates are going to go. So, in closing, that's really all I have to share with you guys today. I genuinely appreciate the opportunity. It's always fun to talk to you guys. And but yeah, that's really that's the one thing I want Canadians to be aware of is that you're going to see inflation numbers that look higher than they are because the tax is gone and the tax is back.
Yeah. Yeah. Thank
Cool,
you.
guys. It has been a little bit longer episode than we normally do, but a lot of solid information here. And I think it's important to kick off the year right and get as much as you can. So if you stuck around to this point, we appreciate you and hope you got at least something important out of this that you can take into your family life. So if you have any questions, if you have any comments, or if you want to talk to Jivan, we're going to put his number and information below in the chat underneath the post. And but from there, everyone, happy new year. I'm glad you came, and I'm glad you're still around, and all the best to a very happy and successful 2026 for everyone. Thanks for coming on, guys.
One sec.
Yeah, what?
My only shameless request of the day.
Yes.
We have been lucky enough to be #1 for Reader's Choice in Burlington for the last 6 years. That is coming up again. So if your viewers are watching, I'd love it if they voted for Jivan Sangera as the top broker in the city and Circle Mortgage Group.
Okay.
Awesome.
Sounds good.
I will.
Okay. We'll do.
All right, guys. Have a
Happy New
good
Year,
day,
everyone.
everyone. See
Happy
you.
Cheers.
New Year and very successful 2026 to everyone.
Bye.
Bye.